Apes and apettes, welcome back to the channel. We have a lot to talk about in a very short amount of time. Number one, we're going to talk about what happened today in the markets because, again, another very insane day and the volatility might be back. You've seen a lot of up and down, back and forth action. NASDAQ moved up and down 1%, almost 3 times today. So it's been very volatile. Number two, we're going to talk about everything currently happening with AMC stock. And number three, we're going to look at the crypto markets. And we got a weird sell-off today, which was a drop of about $2,000 on Bitcoin that I do want to talk about because you might just be seeing some firms that even have held short positions on AMC in the past start to step away from the crypto environment. Now they are citing regulatory concerns, but we all know why they're doing this. They're running out of capital. So we're going to get into all of this situation. Guys, buckle up. This might be a longer video. Hopefully not. Might have to break it in two. Who knows? But let's get into it. So today, first things first, 8:30 in the morning, you got the inflation report that came out. Now, the inflation report, month over month, the headline reading was 0.4%. The expectation was for 0.4%. The inflation rate year over year came in at 4.9%. Expectation was for 5%. And this is like the thing that has people very bullish, is the headline number coming down from 5% to 4.9%. Give me a break, okay? Core inflation year over year came in at 5.5%. You were expecting 5.5%. Core inflation rate month over month, you were expecting 0.4%. This came in at 0.4%. Now, some people were trying to get optimistic here and say, hey, maybe the month over month core inflation rate only goes up 0.3%. That would be like 3.6% annualized. At 0.4%, that's 4.8% annualized. So big differences in an annualized basis off of just these, 0.1 moves, right? So it came in basically on expectations. Now, expectations are high, and they've been high, and you're not getting good news essentially coming out of inflation. Now, on one hand, though, you're seeing some very volatile moves in the bond market as well, because when you're facing this debt ceiling crisis, it sounds so reverse to say this, but investors are actually going out and buying bonds. Because what's the alternative? If the government does not raise the debt ceiling, then, well, what's going to happen, right? Bond prices are probably going to fall. Granted, yes, that's true. But what's going to happen to stocks? They could drop way more than bonds. So you are seeing this flood into bonds that is kind of giving you this bullishness as well. But at times, you're seeing the opposite. So it's really push and pull. And that is helping to fuel, what's going on in the markets right now. A lot of it does come down to the bonds. Now, tomorrow, you're going to get PPI month over month for April. You're expecting a 0.3% increase. That is up from negative 0.5% last month. So you're expecting a big increase to PPI as well. Obviously coming in higher than 0.3%, not good. If it comes in at 0.3% or lower, that's going to be kind of good, right? Fed Waller speaks at 10:15 a.m. tomorrow, and that will be important. Granted, we're, by then going to have, obviously, CPI came out this morning and PPI tomorrow morning. Now, Friday, the Michigan Consumer Sentiment Survey, you really just got to watch inflation expectations on the 1 year. They went from 3.6% to 4.6% last month. You want to see that come in lower. You're expecting another 4.6% reading. 5-year inflation expectations, if these start to go higher, that's going to be a problem as well. From the start of 2023, you were seeing 5-year inflation expectations at 2.9%. Last month's reading went to 3%. If this next reading goes higher than 3%, if it goes to like 3.1 or 3.2%, that's exactly what the Fed does not want to see, is those inflation expectations starting to get unanchored and starting to go higher. That's a big reason why the Fed is, we might raise, we might pause. We don't know. We're going to see what the data does. We're going to see what inflation expectations do, in other words. So that will be very important on Friday. So this week is far from over, guys. There's a lot still to come. And again, feed this into your own kind of positioning on where you're currently at. If you're long, if you're short, if you're bullish on AMC, if you're not, take this information into consideration, because what we have seen lately actually is AMC stock outperforming when the markets do fall. So lately what we've seen in 2023 is that when the markets do fall, AMC stock has been doing much better, has been green on most of the red days in the markets this year. Whereas when the markets are up, AMC tends to be slightly green or just underperforming the markets, or even negative. Today, AMC stock is down 1.26%. Shorts take this opportunity when the markets are green to short AMC stock because they have more capital on hand when stocks go higher. They have more collateral value when stocks do go higher. So this fundamentally makes sense from my perspective and what I've talked about with this collateral crisis. And I think that's ultimately what this boils down to, and likely what it will boil down to when AMC stock does actually go through its next short squeeze. Now, like I explained in the last video, we're in this cycle right now, guys, where AMC rallies after earnings about 80% of the time. I like those odds. I like those statistics there. So I'm bullish. I'm more bullish than not right now. And I think it's hard not to be when 80% of the time AMC stock does rally. So also keep that in mind. Now, if we go ahead and refresh this, take a look at the option activity here on the day for AMC stock, you have seen 8 orders totaling $23.29 million, a positive order value of 2%. Very negative, right? But it's really concentrated in a lot of, or just a couple, I should say, a couple positions. They're buying a lot of contracts. They're buying like 10 to 15,000 contracts. That is what also moves the needle with AMC stock. It's not necessarily just all shorts, right? Shorting AMC. It can also be in the options. Just let the market makers short AMC, right? Because, hey, that doesn't come up in the short interest report. So the short interest probably still a lot higher. Estimated short interest of free float at 24.89%, free float out on loan at 32%, 166 million shares out on loan, days to cover sitting at about 5, 3-month cost to borrow rates at 210%, and 100% share utilization. If we take a look at the current cost to borrow fees, cost to borrow max 305.75%, cost to borrow average 282.49% there. So there you have that. And again, on the options, I do want to point this out like I did in the last video. Based off of some of these hedges that you are seeing, like this is the specific one that I went over in the last video. These people bought a July 21st $10 put, $15,500 for $9.5 million. They also bought a July 21st $10 call, 15,500 of them for almost $300,000. So that's a 30x difference based off of the price of the calls and the price on the puts. This does show me, or at least tends to make me lean to this, they think AMC stock's going to go down a little bit, right? They probably don't expect a huge drop from here. But if AMC stock rallies, they are expecting it to rally huge, because if they were not, and they just wanted to properly hedge out this trade or their positions, they would go closer to the money. They spent $19 a contract on these calls. That means that they would hope these things would go to like $100 a piece or hundreds of dollars a piece. If AMC stock were to rally, that would cover the losses for the massive 30 times larger put position that they have put on in this individual trade. So again, they're exponentially expecting AMC stock to rally if it does. So I don't think there's going to be such thing as a small rally in this next rally. That's not the kind of positioning that I'm currently looking at. So there you have that. If we take a look at the chart briefly, AMC stock down about 1%. We talked about the key levels. I don't want to highlight it too much. 50 and 100-day moving averages at about $5.21 per share. Resistance at $6 per share. This is literally a textbook, just up and down roller coaster kind of motion. So don't surprise me we got rejected at $6 per share. They're terrified. They're scared. Every time AMC has broke above $6 per share in 2023 and 2022 and even 2021 before the June rally, well, hey, I just said June rally where the stock increased 10x in value. That's what happened last time, not last time, but the first time AMC stock broke above $6 per share. Every time it has found support at $6 per share, it's bounced. Every time it's went higher from $6 per share after being, say, like $4 or $5, the stock has rallied a couple dollars higher than $6. $7, $8, $9 has been common so far in 2023. So they're terrified. So they're throwing everything they can at AMC to make the stock not rally. And ultimately that can work for a while, but not indefinitively. Eventually that does come to an end, and usually a pretty aggressive end to the upside. Now, let's talk about this crypto. Crypto, I don't want to call it a crash because it wasn't really a crash, but kind of. At one point today, Bitcoin fell from about 28,300 to 26,800 in the course of like 5 minutes. So I think this is kind of showing some of that stress out in the system right now. That even something like Bitcoin falling that much, you had large investors liquidating positions, right? I mean, you can see big drops like this, obviously. And this was for its own reason. But that's a pretty big drop compared to what we've seen recently. And here is the news, or at least what people are thinking is going on. So it says, is a crypto sell-off imminent? Jane Street Group, a major player in markets such as exchange-traded funds and corporate bonds, has decided to limit its global crypto ambitions due to the regulatory environment. Similarly, Jump Crypto, the digital asset arm of Jump Trading, is withdrawing from the U.S. market for similar reasons. While both firms are still making markets in crypto on a smaller scale, they have decided to reduce their exposure to the U.S. market. With that being said, will this move impact the industry as rumored, as the two firms hold a combined $4.1 billion in crypto assets? Have they had a part in the recent downtrend that Bitcoin has recently experienced? So these guys are like market makers in the crypto world. And they can blame it on regulatory conditions or whatnot. That's BS. Crypto has got more lean over time. More or less restrictive, I should say, over time. Now you have a futures Bitcoin ETF. That was not a thing years ago. Or 2017, last time people got really excited for crypto. So I'm not going to buy that. Jane Street has been heavily incorporated with AMC as well. And I don't want to draw any, obviously, conclusive lines from that. But they're probably just short on capital at this point. At least that's kind of what it looks like to me. Which, good thing for us. Not a great thing for crypto, though, because they do help make markets. That's essentially where they buy and sell stocks. They day trade all day long to keep the price from fluctuating too much. That's why, like the flash crash of 1987 in the broad markets, market makers didn't want to buy anymore. They were out of money. So the markets fell 20% because there was nothing. And that's when the Fed became the buyer of last resort. That's why the Fed bailed us out in the dot-com crash in the 90s, 2008, 2020. Ever since 1987, they became the buyer of last resort. So they are the market maker of the market makers. But from this, that don't look good. Again, looks good for AMC, not so much for the crypto world. Nonetheless, guys, that is going to do it for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section if you have not done so already. If you guys also want to trade with me live in real time, link down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.